Tariffs imposed by the U.S. government will cost global businesses up to $1.2 trillion this year alone. That's according to an analysis from S&P Global. The report said about 1/3 of the cost will be shouldered by companies, with the rest picked up by consumers. To understand how countries are adjusting to the trade war's economic uncertainties, I spoke to Colombian economist Mauricio Villamizar.
Villamizar is a member of the board of directors at Banco de la República, Colombia's central bank. I met with Villamizar at our studios in Washington, D.C.
Sometimes I think tariffs equal terror because you see so many countries that are just kind of scrambling and then also trying to adjust because the tariffs, they change this day, they're another the next day. And here you are sitting with a lot of the people who have to deal with that sort of thing. I mean, how would you, I mean, you laughed when I said that. What are the discussions like and how does one deal with that?
Yeah, so in October of last year, we were sort of very expectant to see what was gonna happen. I think Liberation Day in April, that's when the terrifying tariffs came into place, and at that point, we were shaving off global growth by a lot, and even for the U.S., we were thinking that it was at least several analysts were thinking that U.S. was gonna have a very modest growth, and there were even talks about a U.S. recession because of the tariffs. The effective tariff rate at that moment was set at a number close to 24-25%. That's one of the highest numbers in the past 100 years. Since then, the effective rate has fallen. And that I can sort of attribute to two reasons. One is, every day things change, escalation, goes up, and talks, and there's been a constant change in the setup of tariffs. And then the second one is that even though certain tariffs are in place, we don't really see the numbers match that amount of tariffs. So we're seeing sort of trade going under that number. So there's sort of a shading that could represent a number of things. But ultimately, people are expecting that the effective tariff number right now is closer to 10%, not 24. 10 is still historically high, but nowhere near as high as it had once thought. So all those fears of a recession had sort of calmed down in the past 6 months.
But we have heard the head of the IMF and Jay Powell talk about the risks with the tariffs. And I always think about people in your line of work as really kind of being cheerleaders of stability, predictability. So how unsettling is it for people in your community?
Yeah, as most of the academic world, we would be sort of against these protectionist measures, because it really blows away several of the trade benefits that we have receiving, and maybe we're taking them, or we have been taking them for granted for quite some time. But yeah, I mean, this this amount of tariffs going on leads obviously to some sort of trade fragmentation, nearshoring, having to sort of substitute out your cheapest imports to more expensive ones, limiting your exports. There's some readjustments going on there. For the case of Colombia, for example, one very paradoxical thing is that coffee is being taxed at 10%, but our competitors are being taxed at very higher rates. So Brazil, Ethiopia. So in that very particular case, in relative terms, we're actually gaining importance in the U.S. market. But in overall terms, we recognize that tariffs usually bring about very negative consequences that we should hopefully avoid. So that's our main take.
Since joining the central bank in 2014, Villamizar has contributed to Colombia's financial policies.
Mauricio, I know that you've been coming to this quite a while, and And I think about what you do for a living. It's obviously public service. And the private sector always is that magnet that draws so many people away. What keeps you doing this, and why not jump to the private sector?
Yeah, that's a good question. I mean, I think that at least personally for me, the the central bank atmosphere sort of brings together the best of three worlds, which is academia, the private sector, and the public sector. So if you sort of play it right, you're able to still conduct your research. Most of the research that I do over the weekend, but still, I try to dig some time because that's important for me. But then you get to be a policymaker, and that's something that very seldom you get to do, in the private sector. So even if the private sector offers maybe more attractive offers, um, central banks usually have this very special place that I appreciate.
China and the U.S. paused additional tariffs in the hopes that the two countries will come to a long-term agreement that benefits both countries. I always say that there are moments in time when you look back in history, this is a moment in time. But when you're living in the moment of time, you can't really make sense of it. So I want you to put on your kind of thinking hat 5 years from now, 10 years from now, when people look back on this period of time, how do you think it'll be characterized?
I think it will all depend on the resulting effective tariff rate. If we see that number go down to somewhere, I would say in a ballpark number before below 5%, I think that's just going to be a bump in the road in the line of history. If this actually worsens, then it could be the upside risk would be a definitely a point in time where in history when commercial fragmentation actually really took off, and when some countries actually had to choose between certain markets over others. So that hopefully won't come to take place.
What's the risk of that? Do you think it's close or?
I'd say it's if you were to put everything in a balance, I would give more weight towards the former than the latter. So I think it's actually more likely that we can navigate this through with some costs, adjustment costs as well. Obviously, the labor market's going to pay a price, but down in history, I would be more optimistic, thinking that this wouldn't be really that particular point in time when the world changed.
Oh, that's good news for the rest of us watching.
Hope.
Let me ask about global governance because the UN, the IMF, the World Bank, everyone kind of acts like they're clunky institutions. They need to be reformed. There need to be changes. You're there in the mix. You see it in reality. We're watching from the outside. Are there changes you would like to see? And do you think that's a fair complaint that you hear or unfair?
Well, I mean, I can obviously speak on behalf of the central banking community more than the multilateral community, of course. Um, I to be honest, I think that there's obviously room for improvement as in anything. Um, but I mean, to be honest, up until this point, I don't know the extent to which the current reforms that the U.S. is sort of leading, and across all these multilateral entities, have had like a big effect not only on the employers but on the programs that they've been delivering in the different countries. I know, for example, that in Colombia, USAID, for example, almost completely shut down, and they were playing an important part on some development programs. So policies that shut them off in a very abrupt way, I think that's unfortunate.
And for a country like Colombia, how do you fill that vacuum? I mean, because that's not just one country, there's several that are dealing with the absence of USAID. How do you deal with a blow like that, especially when it's unexpected?
Yeah, it's a blow that in the worst case you might end up hindering some of the resources to needy population, of course. right now, what I would say is, all these multilaterals, whose initiatives are very important, especially climate based initiatives, financial development, all these sorts of good things should be hand in hand with the different governments. So a country shouldn't just rely on these institutions. So in a way, the main leader of that should be the government itself, and by doing so creates a buffer zone that in this case, when funds are being redirected or reduced, you can at least see that the main players is still in place. So that would be sort of one way of looking at the organizational scheme of these projects should be.
Villamizar attended this year's annual meetings at the IMF and World Bank, two institutions that have faced calls for reforms.
The IMF, World Bank, there's been a push to modernize. There's areas that have kind of cropped up in recent years: climate finance, sustainable growth, debt relief. How are they responding? And is there still work to be done there?
There's a lot of work still to be done in those areas, and for many countries, many emerging countries, good climate-based, for example, initiatives are just beginning to sort of surface. So there's a lot of work still required. The question there is, again, who is responsible, for those initiatives to go forward? I don't think that's really the place for monetary policy, for example. Not mostly because of the limited power of instruments within the monetary policy space. So you have all these entities, within the fiscal, within the executive branch, that should be taking control and taking responsibility for these actions that are nowhere near as developed as one would ideally think.
They could provide the fuel in some respects. What more could be done for the global South, for Colombia, for example?
Yeah, well, I mean, for the moment, and given the current, political, situation, I think that, one thing would be, stability, geopolitical stability. The other thing is, access to cheap finance. So one thing that is usually an obstacle for countries to have access to these, initiatives that are, well suited for humankind, is the cost of financing. And as long as you have, full access to capital markets, and as long as you're not being overly punished on your debt, then that should be at least a first step. The problem right now, Mike, is that you're seeing a lot of fiscal deterioration throughout the world, including the U.S. But fiscal spending has been, switched to the max. So it stopped actually being countercyclical and started becoming pro-cyclical, which is very concerning. So they're actually amplifying, the real business cycle. They're actually amplifying booms, but they're also amplifying when a country, goes bust.
So interesting you bring that up, because I still remember Greece and these austerity measures and people struggling. And yet, as you point out, you can't put everything on the credit card. So if you were to kind of tease that out into the distance, I mean, how alarming is that?
I think it's very alarming. If I can give you a few examples, the U.S., for instance, has conducted some cuts on spending of about $2.5 trillion a year, but it has also cut taxes for twice that amount. So in total, what you're left is with a huge fiscal stimulus, which are very expansive, fiscal spending. One in which, for example, for the U.S., you would, according to many of the budget calculations, you would go from having a debt of 115% of GDP to over 140% of GDP in the course of about 5 years. So that's a huge shift of becoming indebted. And when emerging markets do that, so Colombia is no exception, for instance, you become riskier, and markets perceive you as riskier, and then they demand a premium, which makes debt definitely more expensive.
It's interesting because my mom grew up during the Great Depression, and I think one of the things she used to complain bitterly about is that the United States is just amnesia, that people don't remember all of this sort of thing. And I think the further the distance is, the more pronounced that becomes. So when you look at the United States, and I think this has been kind of an example we've seen in other administrations too, where it's just kind of like, they used to say tax and spend. Now it's just like tax cut and spend. If that is to continue on, clearly the United States being a driver on the global economy, that's going to impact you and other countries. How concerning is that?
It's very concerning. I think the U.S. can actually export inflation to us in that sense. And then a very negative outcome also of overspending. It's something that in the finance literature is referred to as a crowding out channel, which basically, in very simple terms, means that uh, you know uh, the whole banking sector is flooded with sovereign bonds, and banks end up lending less to households and firms in order to hold these bonds. So ultimately, the final player who pays the price is the poor household or the vulnerable firm who is going to have a harder access to a loan, to any sort of credit.
You come here, what are your feelings, and what are your feelings when you leave?
Yeah, that's a great question. I do feel that you always leave a little bit more concerned than when you arrived. So I sort of share that story. And the reason is that you come here knowing a little bit about or a lot about your own particular risks, country-based risks and idiosyncratic risks, and you're pretty well on top of those. But then when you start sharing ideas with the whole financial community, you might end up knowing additional global risks that are now part of the whole risk spectrum that wasn't there before. So new information in some of these cases means more concerns.
You might do this next time you come. Mauricio, thank you so much. Really
Thank you, Mike.
appreciate it.
Yeah, no problem. My pleasure.